Hello friends, my name is Deepak and I'm a tax code advisor. Today on the group, somebody asked about oil and gas. They were thinking about investing in a particular fund and they were asking if anybody has invested in oil and gas. And my comment is, yeah, I know a lot of people who put money in oil and gas, mostly because they want to save on taxes. But the downside is that very rarely these oil and gas funds work out. I'm not saying that all of them are bad. I'm just saying majority of them don't really deliver any true value. I think there's a better way of saving taxes and building wealth. But some of them are really good. So you need to be able to identify those good opportunities and ignore all the bad ones. The problem is the bad ones are the ones who are doing the strong marketing. These are the people that you'll find on Instagram, on YouTube, people talking about them. They're the one telling them that how great they are. But oftentimes the good opportunities, now nobody's really talking about them. They're always a secret. So I want to share some ideas around what kind of things you can pay attention to if you are looking for a good investment, looking for a good outcome. What are some of the basics that you should really pay attention to? So number one is overconfidence. Always leads to over trading and worse performances. So again and again, I see people claiming things because they're simply overconfident. I think I would rather be skeptical about investments and take my time, ask questions, and figure out whether it makes sense for me or not. Normally, people would ask something like, oh, who else is doing it? Who cares who else is doing it? If 50 million people are doing it and they're all going to get cheated or they're all going to lose their investment, why do you want to be one of those 50 million people? You want to be the one who makes the right decision. And you can only make the right decision based on data by asking the right questions, collecting your answers. You should never be pointing finger at a third party that I did this because somebody said so. It's just not worth it. It's not worth it for that third party. Definitely not worth it for you. You need to be able to ask the question. So please always pay attention to whether you are overconfident about something or not. Okay, and don't do too much trading. People who are going in and out, in and out, in and out all the time, history shows that those people don't really do that well. I've been to seminar where people were trying to sell some sort of trading system which was claiming that, hey, if you do 10 trades a day you can make 30% ROI, 40% ROI, all kind of crap like that. But the idea, they just want your $10,000-$20,000 to attend that seminar. So I'm not a big fan of doing a lot of trades. I'm not a big fan of being overconfident. Oftentimes you'll find me skeptical. Oftentimes you'll find me asking a lot of questions. That's how I am by nature, and that's what I tell all my clients. Even if I tell you something, please do not trust me. Do your own research. Find the answers to your questions. It is possible that maybe I'm overconfident. I might not even know it. So that happens sometime as well. So please challenge me. Like, hey, Deepak, prove this to me. How can this go wrong? Force me to answer those questions, please. All right. So, like I said, people who are making a lot of trades, going in and out, they seems to be making the least amount of money. People who hold on to their investments for a very long time, they seems to be doing very, very well. I mean, sometime I'll meet with people who are not really making that much money. I mean, they're making like $50,000-$60,000 a year, and they have like 5-6 properties. And you know what? Some of you guys are probably saying like, well, I have 5-6 properties. Yeah, you do, but more than likely you have debt. These people are making less money and they have debt-free properties. Amazing things that people can always do. Always be careful when people tell you something that is just simply too good to be true. You know, um, Now there is a difference between something you simply don't understand and something that is to be too good to be true. So you need to be very careful with that. If you don't understand something, then you need to ask questions. We all remember Bernie Madoff, right? He was showing these impossible, consistent returns. One year after the year, and we all know how that ended. So if somebody comes to you that, hey, look, we can give you 20-30% guaranteed return on something, I'll be extremely careful. Like Warren Buffett has said many, many times, that making more than market is just very, very hard. So if that person is telling you they're so much better than Warren Buffett, then the question I would have for them is, did they put their house on mortgage and did they invested everything in that particular business? And if they have not, if they have saved even a single penny somewhere else, then I would not trust them. I think you get the point. If they believe so strongly into that particular investment, then why are they not putting every single penny of theirs into that business? So be very, very careful with that. Try to play a long game. Don't try to look at the pictures for next 3 months, 6 months, but look at the picture for long term, next 5 years, next 10 years. The longer the time horizon you have, the more higher probability you have for positive returns, simply because of magic of compounding. We all know that. I think the biggest benefiters of compounding is our kids. So if we can implement some strategies, whether through 401k plan or Roth plan or even insurance, if you don't care about markets, or real estate for that matter, whatever it is that you believe in, I think your kids have the longest time horizon. So if you can do something for them, I think they will reap a huge benefit. But you can always do it for yourself as well. Whenever we look at a shorter time frame, we see a lot of volatility. We make a lot of wrong decisions because we panic. But when we take a look at the longer time horizon, things start to emerge a whole lot better. Now, for example, earlier this year, I met so many people at different conferences, different meetings, and people told me, this is how the market going to be. This is how the market going to be. But the problem is, no two markets are ever same. Whether they're bull markets or bear markets, especially the bear markets. Actually, I guess bull market you don't really care because you're making a lot of money. But in the bear markets, markets are not always the same. So when somebody refer, oh, this happened back then, that is not necessary. For example, right now, even in some of the groups that I participate in, lot of conversation happening around real estate, a lot of conversation happening about the recession last year, but data is telling us something else. So we need to really trust the data rather than what people remember from their memory from the past. So compare the bear market. For example, if you compare, right now 2022 with 2008, or you compare 2024 with 2008, you will find it's completely different market. The reasons were different, recoveries are different. I made a detailed video about the current state of real estate. You can go check that out and see how different the market is right now. So if you only rely on your memory or history, oftentimes you'll arrive at a wrong conclusion. So please, don't. You can learn from those uh, from historic mistakes, but don't rely on that. I think the future is different. Okay. Um, if you meet people who are giving you predictions, they're telling you what is going to happen in future, and they're charging you fees for it. That is a very scary way of doing business. I would also stay away from that. It's very, very hard for anyone to know what the future looks like. If somebody gives you any kind of price target, this happens all the time on the TV networks or YouTube gurus, people telling you, okay, by, end of the year, this is going to be S&P 500 target. This is what's going to be with Apple target or Tesla target or whatever their favorite stock. I guess for 2023, 2024, it was Nvidia, although people are not talking about that as much right now. But look, giving targets, especially if they give you targets and the time horizon at the same time, that just doesn't really work out. So I would not really depend on that. Always remember that no matter how good somebody is, even if they've been doing it for 30 years, 40 years, 50 years, there's always a risk. Even if people tell you there's no risk. If you ever come to me and you even ask me about a tax strategy that I know that works 100%, there's always a risk because there's a way that you might make a mistake. There's something that you might miss out on or something like that. It can happen. So there's always a risk. Risk is necessary for a long-term growth in the market. It comes as a package deal. So please, if somebody tells you there's no risk, I'll be very careful with. There's always a risk. The question is, you're willing to take that risk or not. So you should understand the risk and agree to take on that risk. If you disagree on that risk, then stay away from those kind of investments as well. Most investors fail to pick winning stocks or ETFs. So what do? They look for other people for advice. You know, um, the truth is, if you pay attention to what's happening around you, you can do a whole lot better than general markets or relying on other people advice. I see in my business, I see a lot of people who lose money in different things, in real estate, in short-term rentals, in long-term rentals, in crypto, and even stock market. I meet a lot of those people, but then I also meet a lot of people who are extremely successful in every single one of them. Almost on weekly basis, I will meet a client who say crypto is going to explode if Trump becomes the president. And then I will meet with some people that, okay, I think we're done. Crypto has reached its potential. And and this is the end of the story. The problem is nobody's in crypto business, so they have no idea which way it can go. All they're doing is speculating on crypto. But imagine if you are in semiconductor. Imagine if you're a real estate builder. If you're a real estate builder or you're a real estate agent, for example, you should know all the facts. You should know what the inventory look like. You should know, where these builders are buying their inventories from. You should know how many projects they have in pipeline. You should know all that information. So whatever industry you are from, you should become the expert of that industry. It's going to help you two ways. Number one, it's going to help you become a better employee of that company, obviously, whoever you're working for. Number two, you will have more prospects for getting promoted. And number three, you'll become a better investor. So please, if possible, learn more about whatever industry you are in. I think you can make a whole lot of money in that. But for certainly don't depend on other people advice. I don't think that just doesn't really work out. Okay. Um, Sometimes I see people asking questions about what is Fed going to do, what is the government going to do, this and that. I don't think we should rely on all those things. First of all, they're out of our control. There's really nothing we can expect from them. You know, the truth is federal government is going to do something that none of us are expecting. It will happen. Something will happen that none of us believe can happen. Who would have believed, 5 years ago that something like COVID can happen? But it did happen. Who would have believed that, there will be such a big war between Ukraine and Russia, and certainly not for this long? Who would have thought that um, Hamas will have this kind of tactic against Israel? These are unbelievable events, but they do happen. I mean, who thought 9/11 would happen? So truth is something unexpected is going to happen. You should embrace that, and market will surprise you. So you need to prepare for that. That's why I keep saying don't chase the past performance. Focus on a long-term horizon. Look at a bigger picture. I think you will have a, a better rate of return that way. This one is no secret, but you need to start as early as possible. So I'm talking to all my young friends right now, who are just, I know right now in 2024, a lot of people, especially in the IT field, are having a hard time finding a job. Be patient. You're going to get those, especially the ones who are in college or school right now, or if you have kids who are even high school right now, you need to start thinking about saving for them. The earlier you can start, the more benefit they can get out of compounding. I think um, this one probably beats all the other investment strategies altogether. So compounding is truly a magic. So by the way, while we're talking about compounding, like I said, I see sometimes people who are not making that much money, but they have built enormous wealth. You know why? Because they keep their strategy simple. I recently met a gentleman who was wife was running a food truck, and gentleman was in a welding business. He had here in Texas, and he was able to purchase, I think, 6 or 7 real estate properties, all paid off, because he had a very simple philosophy. Every single penny he had, he would put it back into his properties. Now, we can argue whether that's a good strategy or not. That's a whole different topic. But my main point is the gentleman was able to build enormous amount of wealth by following a simple strategy. For example, if you are saving minimum X dollars per month, your per week or per day, whatever your strategy is, if you are putting in S&P 500 or maybe total market index or maybe into real estate, whatever your strategy is, the simpler it is, the better it's going to work. If you are in and out of stocks every single day, every week, every month, some of you who have this as a full-time job, I think you'll be doing fine. But for most of us, we'll probably end up losing because we won't be able to catch up. I mean, we are going to get sick. We will get busy. We will have to act on deadlines. And when we get busy, who is watching all this stock portfolio? Who is paying attention to all the news? Who is watching all the trends and all the things that are happening in the market? At least not us, and we are going to end up losing, and that is going to be bad for our morale, and then more importantly, we will probably end up selling. So, uh, and let's just say if you are one of those, you are in that situation right now. Maybe your portfolio is not doing that good. Maybe there was some issue. You got to be careful with making a switch. Maybe tomorrow things will be good for you. Sometimes in on our group, people leave us a message that, oh my God, I was holding on to such and such for such a long time, and look at this, I just sold it last month, and now it has turned around and it's making a lot of return. So you got to be patient. So drawdowns are part of investing. So you just got to be patient. It will happen. So we see that with S&P 500, we see that with other ETFs. Drawdowns are always there. You cannot avoid them. So please, don't be scared of them. Avoid selling in these kind of situations. I saw so many people cancel their real estate contracts when COVID hit because they thought that, hey, now COVID hit, real estate market going to crash. But what happened was it was the other way around. Real estate prices went up, and now those people. I mean, matter of fact, I met some people who left a state. There were people who, for example, sold their homes in Texas and moved to California, and COVID hit, and now they cannot come back and buy the home in California or in Texas. They completely got priced out. So stuff like that happens. So avoid selling in panic. Always stay invested and let the compounding to work. You just need to have a philosophy. You just need to have what is it that you like to do. I think that's going to make the most impact. Now, why do we sell it? We sell stuff because we hear some sort of hype on on YouTube, on Instagram, on news. Funny thing is now I talk about YouTube even more than the news because I think that's where people are getting a lot of their ideas from. So you know the truth is volatility will always be there, so don't worry about that too much. The key point here is know what you own and why do you own it. And as long as your buy is good, as long as you have that, I think you will hold on to investment. And take a look at Nvidia, for example. Okay. Nvidia went all the way up to 140. I'm recording this in October 2024. So Nvidia went all the way up to 140, and then it went down to I think almost $90. And now it's back up to almost 140. How many people sold out when it went to 125, 120, 110, $90? I mean, they lost out quite a bit. So stuff like that happens. The key thing is whether you believe in that product or not. If interest rates goes up and down, who cares? If the government changes, who cares? What cares is whether you have a good asset or not. So as long as you have a good asset, then that things will be fine. You just need to worry about reducing your risk as much as possible, controlling your emotions. Don't buy stuff because you're afraid or you're acting on some greed because tons of people are buying it. That's the most common one. Oh, that person is buying it. My cousin bought it. My friend bought it. That kind of stuff. Understand that over the long term, a good asset will always work out in your favor. So that's what you're looking for. Really good assets that produce a lot of good money for you over time. They're generating a lot of income and they have a lot of appreciation. They are generating more money. That's one of the cool things, by the way, about equity market compared to real estate is that in real estate, most people are building equity, but they're not really not doing anything with that equity. Equity is in their home. Now you can do something with it, but most people don't do anything with it. Some do, but most people don't. But in businesses, great businesses, for example, companies like Nvidia, what are they doing right now? Now, I'm not saying that go buy Nvidia tomorrow. I'm just illustrating as an example. What are they doing? They're investing in other AI startups. They are investing in other businesses. They're looking for next Nvidia, where the next level of growth can come from. So that's why I like equity markets quite a bit because you're able to do that kind of stuff. So those are my simple thoughts on how you can make some good investment decisions. I hope you found that helpful. If you have something else that you would like to add to it, please leave it in comments and we can always debate it in the next discussion call. So thank you so much, and I'll look forward to seeing you at the next Wealth Summit that is coming up in November 10th on Sunday, 8 a.m. to 8 p.m. 12-hour event. We are going to have a lot of fun that day. So I'm so looking forward to that day, showing you all kind of tax strategies, showing you all kind of ways to build wealth. I think I'm super excited. I'm sure you are too. So I'll see you there. Till then, goodbye.